Welcome to the Friday edition of Tech Stocks Daily Podcast. Today we're exploring AT&T's upcoming earnings report with a dash of bullish flair despite some bearish whispers. Over at Verizon, expect bullish fireworks following their knockout fourth quarter earnings. We're diving deep into Microsoft's intriguing options activity and potential surprises in their upcoming earnings, while Meta is laying down bold AI and CapEx plans, complete with a hefty dose of Zuckerberg ambition. Whether you're an investor, a tech enthusiast, or just here for the latest Wall Street gossip, stay tuned as we unravel today's hottest tech stock stories and predictions in just a few thrilling minutes. AT&T, it seems like they've been in the spotlight quite a bit lately, and not just for their telecom services. Today, we've got multiple developments swirling around this corporate titan that's making waves in the tech and investment world. First off, let's talk numbers, as any investor might. AT&T is about to announce its fourth quarter earnings, and everyone's eager to pick up on those digits. Analysts expect them to report around 50 cents in earnings per share and $32.04 billion in revenues. Pretty impressive numbers, and they're coming right before breakfast for those early risers on the market. But what's more interesting is how AT&T's stock is interacting with these predictions in the lead-up. The graphical tale being told by AT&T's stock isn't too shabby. The shares are currently trading a bit above the 5-day, 20-day, and 50-day exponential moving averages, indicating slight buying pressure. What does that mean? They're in a generally bullish trend, suggesting the bulls are doing their happy dance. But it's not all easy peasy. The stock price is looming just below the 50-day SMA, which might give short-term investors reasons to pause. The long game, however, seems clearer. With its 200-day simple moving average showing significant upward momentum and an attractive analyst price target hovering around $23.52, AT&T's three-point stance as a heavyweight player seems secure, while whispers from Argus Research and RBC Capital echo the opinion that there's still about a 21.96% upside to be had. Switching topics slightly, we're hearing whispers from the secretive world of high rollers, those so-called whales, who seem to have acquired a taste for a bearish outlook on AT&T. Benzinga's eagle-eyed options scanner clocks some hefty transactions, pointing toward a skepticism of the beloved telecom's near-term future. The prevailing sentiment appears gloomy, with a distinctly bearish stance, aligning with recent put and call options, signaling an appetite for a price range bent from $14 to $24. Not surprisingly, there's rumor of price targets being adjusted by key industry players post-stock review, hoisting the anticipation for what moves AT&T will unveil next. Whether troubleshooting its strategies or supercharging acquisitions, the multi-course offering served up by AT&T continues to engender intrigue from investors and traders alike. Their decision to divest its stake in DirecTV suggests a renewed commitment to what it does best, focusing on mainstay business operations. Finally, AT&T's stock allure extends to wallet watchers looking for smart, inexpensive bets. A post-dip performative boom saw the stock vault 65% since its bottom circle in July 2023, a reminder of its potential even amidst competition and market fluctuations. In summary, AT&T's presence in tech news today reflects a complex weave of achievements and challenges, making the company a continuously compelling entity in the business landscape. If you watch close enough, some pretty gritty insights might just fuel your own next keen portfolio decision. Stay tuned as the drama unfolds in this telecommunications saga. Hold on to your hats and glasses, folks, because Verizon Communications has been sending some impressive signals through the tech skyline today. There's quite a buzz in the air, all thanks to two major stories: some intriguing moves in the options market and a stellar fourth quarter earnings report. First up, let's dial into the options action. Unusual options activity has been spotted with Verizon stock, and it's got Wall Street abuzz. When I say unusual, I mean high-rolling investors have placed their bets, leaning a bit more on the bullish side for Verizon's future. Benzinga caught 8 ambitious trades through their options scanner, marking an atypical pattern for VZ. Dive into the juicy details, and you'll find 62% of these movers betting in favor of Verizon, with a hefty $550,845 placed in 7 call options compared to a single bearish put for $32,020s. It seems big investors are setting their sights on price points between $35 and $45, which suggests someone might know something we don't, yet. Then, voila. Juggling options trading is like being in a Vegas casino, where the stakes are higher, but the potential payoffs are grandiose. It's no child's play, and while it could look like these traders are reading tea leaves, they've supported their predictions with numbers and patterns over the last 3 months. For retail traders and mere stock mortals, keeping an eagle eye on these signals could be as good as finding the holy grail of investment tips. Now slam dunking into the second headline, Verizon released its fiscal fourth quarter results, and the crowd is at the edge of their seats. Verizon stepped up to the expectations and nailed the analyst predictions to the wall. Revenue ticked upwards to $35.70 billion, with a 1.6% increase year over year, comfortably surpassing the anticipated $35.32 billion. And their wireless service revenue sparked a 3.1% growth wave. Highlights included adding 1 million postpaid mobile and broadband subscribers, giving a nod to pricing strategies, and a swell in fixed wireless connections. Moving the spotlight to Verizon Business, they saw postpaid net additions soar, now resting at 283,000, an extraordinary leap from last year. Their consumer sector also flexed its muscle, particularly with fixed wireless, where net additions rolled in at 216,000. On the flip side, their business revenues slid a tad, nudging to $7 billion, a gentle 1.5% drop. Still, margins in the business segment rose while consumer EBITDA margins took a slight dip to 37.5%. Forecasting ahead to 2025, Verizon anticipates a rosy 2.0 per 2.8% rise in wireless service revenue and substantial free cash flow between $17.5 billion to $18.5 billion. So for those betting on Big Red, it's a time of excitement and possibility. Whether you're holding calls or just cheering from the sidelines, Verizon's recent show has cast quite the signal across the financial skies. Stay tuned as Big Red continues to make waves. Today, there's quite the buzz around Microsoft as financial giants have made a bold move within the options market, which has tech enthusiasts and investors on the edge of their seats. Our dive into recent options trading for Microsoft shows a fascinating shift. Out of 96 unusual trades, a sizable 54% were bullish. So, what does this mean for MSFT and its merry band of traders guilds? Well, for starters, Microsoft's options activity is raising eyebrows. We've got trades totaling a whopping $5.5 million, split between $2.68 million in put options and a cheerful $2.86 million in call options. These options are key. They suggest a future price target ranging from about $285 to $660, offering super important insights about investor sentiment and potential stock liquidity. But wait, Microsoft isn't just scoring points with swaggering option trades. It's also catching Wall Street's attention as it gears up for Q2 fiscal 2025 earnings. Set to announce results on January 29th, the Zacks consensus estimate predicts a healthy revenue sprint at $68.72 billion, marking a 10.81% upswing from last year. Meanwhile, earnings per share are expected to nudge up modestly, showcasing a robust growth tempo this financial feast hasn't seen since the golden age of silicon. Historically, Microsoft has a neat track record of surprises, especially beating Zacks estimates time and again. However, this quarter's crystal ball is a bit foggy. The wizards behind the charts have pegged Microsoft's earnings ESP at minus 2.43%, with a less encouraging Zacks rank number 4 right now. A combo not exactly sinful, but certainly making foretelling an impressive earnings beat trickier than finding Waldo in a candy cane-induced mirage. Yes, Azure and Office 365 are the shining knights of Microsoft's cloud crusades and productivity realms, likely driving stellar top-line growth. They're poised for gains with some expected adrenaline from enterprise communication stalwarts like Teams. The saga of hybrid workplaces powers Teams' expansion, as Microsoft continues its battle royale with opponents like Zoom atop the digital meeting sands. Yet amid crowded cloud competitions, fierce rivals loom large. Giving Microsoft an advantageous edge, its focus on our AI overlords and partnerships with titans like OpenAI afforded armaments against these trials. But watch out, regulatory dragons and privacy gremlins dot the path ahead. It's a delicate dance for Microsoft in the markets. Investors should wield a cautious smile. MSFT boasts a pricey forward 12-month PS ratio at 11.1x, towering above the industry's median. While Microsoft promises treasures, steady tire returns through dividends and divine stock buybacks, wandering travelers should possibly hold strategy keys until a more forgiving golden tipping point appears in this NASDAQ adventure. A mighty investment case or risky rebellion? With MSFT cloaked in complexities, that's where investors must choose with vigor and savvy. Meta platforms. Like your favorite pair of jeans, it's making headlines yet again and fitting those profits just right. Today, Meta grabbed a slice of the spotlight as reports shone a light on its upward trajectory, both in terms of its stock performance and its strategic vision for 2025. So what's the buzz all about? Firstly, Meta CEO Mark Zuckerberg jumped onto his trusty steed. Spoiler alert, it's a Facebook post, and announced some jaw-dropping plans for capital expenditure down the road. I'm talking a cool $60 to $65 billion, folks, mainly to beef up their artificial intelligence teams and roll out a new data center so gargantuan it could have its own zip code in Manhattan. Talk about rejecting tiny home culture. Hugging more pixels than ever, Meta plans on bringing about a whopping gigawatt of computing power online, aiming for over 1.3 million graphics processing units by 2025. So, if computers had capes, they'd all be superheroes in Metaland. But that's not all. Zuckerberg showed off some of Meta's crystal ball action, making a series of bold claims. He envisions Meta AI being the leader that whispers sweet nothings to over 1 billion people. Plus, expect Llama 4 to be the main event in AI models and an AI engineer paradigm to start contributing a hefty share of code to Meta's R&D. Cue the internal team chanting, "Robot upgrade-o." Meanwhile, former US President Donald Trump stirred things up further with his criticism of the European Union's alleged targeting of American tech giants like Meta, describing it, as passionately as always, as a mutation of taxation. In his Davos speech, he highlighted how Apple felt that sting with a $14.4 billion tax ruling. You have to admire his theater skills. Trump certainly knows how to deliver a line. How's Meta faring in the investment world? The NASDAQ journal laid down some dazzling data comparing Meta's financial metrics against its industry pals. While Meta's valuation multiples suggest it's priced higher than industry peers, its performance metrics like ROE, revenue growth, and robust profits show it might just be worth those big bucks. But enough about what I think. Is Meta's flare heading for more fireworks, or is everyone expecting a great dunking buffoonery at some point? I'm curious about what thinking. Are Zuckerberg's projections the real dream team scenarios, or just floating blue sky daydreams tickled along by favorable numbers? Do you think Trump's comments have any potential impact, or are they just spice for flavoring today's headlines? Jump into the comments section below and let me know if you think Meta will continue to scale these heights, or if you foresee turbulence ahead on their roadmap to 2025. Go wild in the comments, but try to keep your rants to Zuckerberg-level reasonableness. All right, tech enthusiasts and stock strategists, let's dig into one of today's contenders, Microsoft. So, what's the verdict? Do we buy, sell, or hold? Based on today's sprinkle of information, I'd lean toward holding Microsoft for now. Here's the breakdown. 1. Options activity. The unusual options activity is a mixed bag, but shows a pretty significant bullish sentiment, with more call options signaling the big money is hopeful for upward movement. However, there's still $2.68 million worth of put options sneaking around, which means there's some caution going on. Number 2. Earnings outlook. Microsoft is about to roll out their Q2 fiscal earnings for 2025, and while they historically have surprised analysts, this time the ESP is looking a tad dodgy at minus 2.43%, making a sure-shot earnings beat seem a bit more elusive. It's like getting ready to see if the magic hat contains a rabbit or just a good old stack of numbers. 3. Strategic moves. Microsoft's focus on cloud services and AI partnerships, like the one with OpenAI, strengthens its future potential significantly. They've positioned themselves well in the tech fantasia, but beware, competition and regulatory hurdles can throw in some curveballs. 4. Valuation concerns. Their forward PS ratio is towering at 11.1x, suggesting it's riding high compared to the broader industry. While the cloud ambitions and robust business aspects are encouraging, this lofty valuation could make new investors pause. Given these mixed-ish vibes, holding seems to be the wise choice unless these next earnings show dazzling surprise drama or something major shifts in the tech landscape. Remember to evaluate your own risk tolerance and investment goals, and definitely do your homework before making any moves. The market is a dance floor, not a casino floor, though the lights are just as dazzling. Stay savvy. In today's roller coaster of tech market activity, we saw AT&T and Verizon juggling predictions and options like they're auditioning for a circus act. AT&T striving to conquer bearish whispers, while Verizon flexed hard with a fresh set of stellar earnings. Meanwhile, Microsoft and Meta are giving us everything from bold, somewhat futuristic AI dreams to strategic financial plays, stirring up both excitement and skepticism. Microsoft's impending earnings reveal could be the plot twist everyone's watching for, while Meta's spending spree on AI aims to propel it smoothly into a bold future spotlight. If you enjoyed this breakdown and want to keep up with all things tech, be sure to hit the like button, subscribe, and share this video with your tech-savvy friends. Don't forget to join us again on Monday for another tech-filled adventure. Have a fantastic weekend, and keep those investor instincts sharp.